So today's topic is trust reconciliation and general reconciliation demystified. We want to understand reconciliation. Why is it important? Why does the Law Society give so much importance to trust and general reconciliation? And should it really take 10 minutes or 3 hours is the question, okay? The fact that, that trust reconciliation, a lot of legal professionals spend a lot of time on it, makes us feel that, hey, this is a topic that we wanted to cover. It is a CPD topic, okay? We are approved for 1 hour of CPD for British Columbia, New Brunswick, and Ontario. So let me get that out. So you can go into the Law Society website in Ontario and British Columbia, and if it's New Brunswick, you need to apply by, the portal. That the title is Trust and General Reconciliation Demystified. And the question that we are asking is, should it take 10 minutes or 3 hours? Okay. And we'll see why, how trust reconciliation can be broken down, how can it be simplified, and how can we actually achieve this in a very much smaller amount of time. So the agenda that we will be covering here is what is reconciliation process. Many people, fail to understand reconciliation process. That's why, there's a lot of fear, there's a lot of unknown. And the idea here is like if you understand reconciliation process and work towards it during the month, this should not take a lot of time. How do you do trust reconciliation? We'll walk you through that. How do you do general reconciliation? We'll walk you through that. What does it take to be audit ready? We will walk you through that too, right? And is there a checklist, for audit? And, what are some of the core aspects of audit-ready financial process management? We'll also give a small demo. We'll use our software, uLaw, and show you that this reconciliation is not such a hard process. Okay? Now, accounting systems are of several types. They can be manual, double entry, OneWrite. They can be spreadsheet software. They can be general accounting softwares like QuickBooks, Xero. There are several softwares that can do that. And there are very special accounting softwares, called legal accounting softwares. These are designed to handle trust accounting. They are designed to have, automatic calculations. They can post, a lot of accounting things. They produce very special financial reports that are compliant with the Law Society guidelines. So that's those are the types of accounting software. So when you pick software for helping you with practice management, make sure that it has a legal accounting component, because it's very important that it has that component, because at the end of the day, that's what you need for accounting. Now, there are two aspects. There's trust and there's general. And why do we have to do both? Trust accounting, when you do that, what happens is your trust side of the business is accounted properly. And when you're compliant on the trust side of the business, your Law Society audit gets very easy. The Law Society is looking for trust money, any mistakes there, any misappropriation there. That's what the auditors in Law Society are looking at. The general reconciliation process is what is going to help you with your HST filing or your GST filing, and it's also going to help you with your normal finance, okay? So it's going to help. Okay, there's a question that how long is this webinar? It's going to be 1 hour. So the general reconciliation goes through that process of making sure that your business side of your company is in compliance, which means a CRA audit or a tax submission is easy. So the reason why legal professionals, and this is from the bookkeeping guide from LSO, tells you that you need to pick legal accounting software is because they are very much designed to handle trust accounts. Now, some of the questions that get asked is, hey, what is trust reconciliation, right? Now, there are 4 components of trust reconciliation that you need to understand. The first one is what we call recording the bank statement and balances. So as you see here, that's step one. What is my bank balance? What is my outstanding checks this month? What's my outstanding deposits this month? And what's my bank error, if any? Okay. And then you basically add, you left the first, you add these two, and then you get what we call a reconciled mixed trust balance. So that's step one. Step one is completely from the bank. You basically do everything looking at your bank statement. Second part is basically listing all your outstandings, and you need to list both your outstanding checks and your deposits so that it's very clear what this row 39,476 actually represents. In this case, hey, check number 4 is outstanding, 5 is outstanding, and 6 is outstanding. You need to list that. That's the second part of reconciliation. Now, there's a 2A and a 2B. The 2A is listing all the outstanding, withdrawals. 2B is listing all the outstanding deposits. There might be a deposit that you made and it's not yet made it, and you want that, in your listing. So 1 is all your bank statement. 2 is listing all your outstanding checks. 2B is listing all your outstanding deposits. 3 is listing your client trust listing. That's basically breaking up this amount into what is balance for each of the clients on that day with respect to trust account. In this case, this $1,715.30 is broken up into 3 clients. That's the third part. That's step number 3. Once you've finished step 1, step 2, and step 3, the last part is what we call the comparison. This is comparing your accounting information with your bank information, and they should absolutely align. So that's the last part. So let me just recap. First is step 1, which is basically, making sure that you kind of say what your bank statement looks like. Second part is the 2A and the 2B, which is listing the outstanding checks and the outstanding deposits with respect to your accounting system and your banking system. The third part is your client trust listing. This is basically taking this amount and divvying it up to all the values. And the last part is comparing this value against this value and making sure that they align. That's what is reconciliation process. Now, what are you trying to achieve in reconciliation is you're making sure that your accounting procedures that you have demonstrate the records that you have. Things are happening in the bank where you're depositing, withdrawing, and you're putting stuff in accounting, and you want to match the two and make sure that the two are actually correct so that you can be held accountable for what you are actually managing. And that's all it is about reconciliation. It's not a complex process. It's an extremely simple operation. All you need to make sure is your accounting process is actually correct. Now let's go to the next step. What is general reconciliation? General reconciliation is even more simpler because there's no trust listing for you. So it's basically step 1, which is basically exactly the same as trust, but no errors though. Just listing your outstanding and your deposits. And step 2 is just listing your total, making sure that your outstandings and your withdrawals are listed so that in your reconciliation you know what was left off. And it's even simpler than trust reconciliation because you have a client trust listing to prepare for that. Okay. Now, moving on, how do you prepare reconciliation is basically you need to pick a date when you want to reconcile. The Law Society recommends that you generally choose 25th of the month before the end of the month. That's their preference, that you do that. Once you pick that, obviously you have to go through and, pick whether you're reconciling trust or general. You have to put your bank balance. You need to go through the process of making sure that every ledger item that's there, you clear them based on if you see it in the bank. And if all this is fine, you should be able to reconcile and you should be able to produce this report. At the end of the day, all they're looking for is this report, where you can list your bank statement, list all your outstandings, list your client trusting, and do the comparison. Now, why do they recommend that you do it on the 25th of the month? The reason why they recommend you do it on the 25th of the month is because it coincides very close to when your bank statement actually arrives. But these days we have electronic, banking system, so we can get bank balance any day. So you can choose any day. Now, some softwares go to allow you to reconcile even on a weekly basis. Like, you can preview reconciliations. You can do real reconciliation. So there are a lot of options for you to do those things. But the Law Society requirement is to do it minimum once a month, and they recommend it on the 25th. Okay. Like the way we remind you for webinars in your iPhones and your Android phones, our software, if you download our app, go to the Play Store or App Store and download our app, we will remind you the date when you should actually do your reconciliation every month. Now, if you do reconciliation, then what happens is everything else that the Law Society wants you to do is just document generation. So the Law Society wants you to manage ledgers. They wanted you to manage journals. They wanted you to keep a tab on your intertrust matter transfers, your fee books, expense books. If you do the last two steps, right, these are all the compliance reports that you should be producing on a monthly basis. But if you do the last two, which is trust reconciliation, general reconciliation, all these are already certified by just you doing that. Because once you have reconciled, that means every ledger and every journal that you have in the system matches your books. That means all you're doing is just, an exercise of just producing reports. And we'll show you that in our demo, that once you finish the reconciliation process, how this thing can be so simplified. Okay, that's why we really believe that this whole thing should actually be in minutes, not hours, right? So if you do everything properly and you're able to accomplish reconciliation pretty quickly, then this whole thing should be just producing reports. Finally, for audit, the Law Society has a lot of documents that they want you to produce, and we'll go through them one by one. Okay, they want you to make sure that you have a proper fee structure and handling of retainer. Okay, so when you do that, basically, you're kind of serializing your process, you're streamlining it, so there's less chance of error. So you want to capture your proper fee structure in your retainer, so that way, your fees are correct. You want to handle contingency fee and block fee properly. Okay, you want to create a section where you address retainer in a lot of clarity. You also want to inform your clients about disbursements and cost of recovery expenses, right? You want to be very clear on that. Having the right procedure to issue a receipt upon acceptance of a retainer, right? And then capturing that retainer into your trust. Then capturing disbursements that have incurred and paid out of trust in general, right? And as they happen, the key to all this thing is making sure that you capture the event when it happens. If you do that, then what will happen is the date of capture that you have on your accounting system will match with the date of when it really happened on your credit card or when it actually happened on your bank account. There have been a few questions about CPD. I just want to reiterate, this is CPD. This is 1 hour of CPD. We have all this information on our website. It is professional offers, so you can just go on our website as you register for the webinar. You will know that, okay? Capturing disbursements incurred and paid out from general and trust is very important, basically because if you don't do that, money leaving the business will not reconcile properly. So that's why that element is very important. Then capturing cost of recovery and appropriate taxes is again important, because if you capture the cost and the appropriate taxes, then what happens is your total sum will reconcile better, your HST report will be better, your CRA audits will be better. So that's why that is very, very important. Then the next step after you capture this, because you want to get paid, is raising invoices in timely manner. And when you raise invoices, making sure that your software that you have is recording the taxes in the invoices. And then you address your concerns and compliance of the fee, and you might have adjustments and all that stuff. Organizing invoices to aid, now that you've done the fee structure, you've handled the retainer, you've done the work, you've raised invoices. Now we move on to the next stage of the accounting process, which is handling invoice balance. Now, when you raise an invoice, you might have a couple of choices. First choice is is there money in trust. If there is money in trust, you definitely want to pay the invoice balance directly from trust. If not, then you have to receive money from the client and you can deposit it into general account. So capturing the balance in trust in general is key to actually making sure that everything is flowing in the proper direction. So as you see here, this is the checklist that the Law Society wants you to follow, and this is exactly what they're checking you when they're doing the audit. They'll take a particular matter, and they'll make sure that you're following these proper procedures that they have laid out, which is, are you establishing proper fee structure? Are you raising invoices in a timely manner? And if you're raising invoices, how are you collecting the invoice balance? Is it from trust or general, and are you capturing that in a timely manner? Now, the next step, after capturing the balance is actually getting paid. When you get paid, there are certain things that you want to do, paying disbursements out of trust and ensuring that you're not over withdrawing from trust. That's a very important part. If you have only $500 in trust account, you cannot go and pay a court fee for $550 when there's only $500 in trust account. So that's why, making sure that you manage that properly is very important. And when there's an invoice balance, obviously you don't want to over withdraw from trust. If the invoice balance is $700 and there's only $500 in trust, you only want to withdraw $500, and vice versa. If the invoice is only $450, even though that in trust there's $500, you should not over withdraw. You should only withdraw $450. So they want to make sure that getting paid from trust is handled properly and you're not doing any over withdrawal. And that's something that the reconciliation will catch. In fact, the software should even prevent. But even if you did that without following the software procedures directly into the bank, the reconciliation process is right there to catch that as a banker. Okay? And that's why reconciliation is very important. The last one in the payment section is getting paid in general. Not every time there might be enough money in trust. It's always a good idea to get your retainer topped up, as you're flowing through, checking your invoice balance, getting it topped. That's a good idea to do. But, practical circumstances may lead you to the fact that you don't have that facility. And if that's the case, then when the money arrives, you can deposit in the general. But you have to make sure that the money that you are paying is equal to or lesser than the outstanding balance. Let's say the invoice balance is $500, and if the client accidentally cut you a check for $600, you cannot deposit that into general. You have to deposit that into trust account, move only $500 down and come downwards. So that's the key element. Okay, so paying yourself, for all the stuff that you did, and getting the money paid into general so that you recover all your expenses and your legal fee is an important element. Finally, there are trust handling procedures. Handling trust account, and producing the proper documents. So you need to maintain client trust ledger. You need to have a proper trust receipts and disbursements, making and maintaining monthly trust comparison reconciliation statements, and recording all your Form 9A for electronic for trust transfer, and this only applies to Ontario. For general ledger, again, you need to maintain your general ledgers, general account, right? And you need to maintain your receipts and disbursements, journals, and then you have to maintain fee book, expense book, and discounts and other write-offs that you have, and also capture general monthly reconciliation. Last, for taxes, you can have two forms of taxes. That could be HST in few provinces, and few provinces you have GST payment, and in Quebec it's a little different. You have both PST payment as well. So you need to maintain those things. And then you also have to maintain records of your entire revenue and your expenses so that you can have a corporate tax if necessary. Okay. So overall, this is your checklist. Okay. Everything in this checklist comes out of Law Society recommendations, and that's how we have built this checklist. And as you see, it clearly has 3 stages. One is how you handle your client and how you raise invoices. The second part is checking for balances and getting paid and how you handle your payments. And the last part is actually the documentation that goes behind the payment, and making sure that you reconcile so that everything is proper. Let me go back and stress on reconciliation again. Now, the key aspect that I want to stress is when you have reconciled, what you're actually doing is you're validating every general trust ledger. If you're doing general reconciliation, you're validating every general ledger. That's why I said this part, you get it for free when you actually do trust and general reconciliation. Now, journals are more detailed view of the same ledger. So, if you do this, you get this for free and you get all this for free. Now, expense book and fee book, if accounting softwares are smart enough, they should be able to just take this information and just produce that as that and intertrust master. That's why the hardest part is getting your reconciliation done. And if you have your reconciliation done, rest of it is just documentation. How much time are you spending to manage this? It all depends on the choice of software that you took here. Like, if you have a double entry system, it's going to be a lot of work. If you have a one-write system, it's going to be a little bit of more work. If they are having spreadsheet software, then calculations are not automatic, so you may have some mistakes there. Errors can happen because of your formula and all that stuff, so you got to be a little bit more careful there. If you have general accounting software, most of the accounting procedures for reconciliation is easy, but they're not designed to handle trust accounting. So that's why you need to be very manual. So you need to figure out how to actually make your software work for you. But if you have legal accounting software, then that part gets easy. Like, everything, the software covers the whole 9 yards. So that's where, we say about every entry has to be a double entry system. It has to be a legal accounting, a touch point, and then every touch point that you have, you are recording things that are required for an accounting system, and you're recording things that you will be audited on for. Because you will be audited on things like, hey, have you captured your check number? Have you captured your date of record and all that stuff? So if the software forces you to capture all this stuff, when you do your reconciliation, it's going to be much easier. And when you do your reconciliation, it's all documentation after that. Sometimes the same information needs to be recorded several times. Like if I look at ledgers and journals, they're very similar. It's the same information. You need the same date. You need the same description. So you're doing it again and again if you don't make it a report. What is seamless accounting? Seamless accounting is taking practice management rules, applying it across your software so that in a very seamless way, when you actually do that, we can translate that workflow into accounting touchpoint. So when you actually do something as a practice management measure, you don't even know you're actually doing accounting in the back. That is seamless accounting. And this is what turns reconciliation simple. Because in reconciliation, the key important is recording the data when it happens. You do that anyway. Like for example, if somebody gave you money, you want to give them a receipt, so you record a retainer. When you record a retainer, if you can do all your accounting touch points under the cover, you've made reconciliation a lot more simple because the date when the event happened and the date when it shows in the bank that it really happened are pretty identical. And the other thing that makes reconciliation simple is automatically maintaining ledgers, journals, and the workflow that keep accounting data and the bank record aligned. It's very important that at the end of the day, the bank record and the accounting data have to be aligned, because only when they align, as you saw, reconciliation is completed. So to do that, to make that simple, if you record things on the time of when it happened, the flow will be pretty straightforward from there. Okay? What are some of the benefits of using an accounting software? Obviously, the fundamental advantage that you get of using accounting software is recording the events when they happen. You want to record your retainer on the fly when you're actually depositing that check. So it's very important that you record the event as it happens. Maintaining financial records and bank records in alignment makes reconciliation very simple. At the end of the day, you are reconciling your bank records to your financial records. If the two happened at the same time, where the financial software told you what to do, and that's exactly what you did in the bank, it's going to really, really make reconciliation a very simple task. Because if you're going to say, like, hey, I'm depositing $500 for client X in retainer, and you put that as a retainer, and then you went here into the bank and you actually deposited that bank $500, when you come to the reconciliation, you're going to see the two lines meet, and the reconciliation is going to be very simple. Finally, it's all about compliance, accountability, analytics, and ease of use. These are the four pillars of any legal accounting software, right? Legal accounting softwares have to provide compliance because that's what differentiates them from any other software, so that, like, the law societies can be happy with your audits. They have to provide accountability, and they have to provide analytics, and they have to provide ease of use. These are fundamentally what most people are looking for. So let me quickly recap, a few things about this presentation. I want to spend one more time on this slide. It goes back to the basics. What is reconciliation of trust? There are four basic steps. One, recording what happened in the bank. That means, like, you pick a date, 31st of August, then you pick your balance, then you list out your outstanding checks, you list out your outstanding deposit. Hopefully there are no errors, and you do your math, and you arrive at a reconciled trust balance as per bank. The second, you now list all your outstanding checks and deposits as you have calculated. The third part is where you look up to your accounting software to do your trust listing, and your trust listing comes to an amount. And the last part is doing a trust comparison. So there are four steps, and it should be pretty simple to do that. In my opinion, this should take a couple of minutes. This should take a couple of more minutes, and this should be just a visual check. So we really believe if you did everything in a month pretty, methodically, then what will happen is at the end of the month, when you do the reconciliation, you're going to have, let's say on a daily basis in the bank, you transact about 4 transactions. You're going to have about 80 to 90 transactions in the end of the month. You just go check. Checking off like 80 transactions is going to take you roughly about 10 minutes, and then you should be done with your reconciliation. And that's where bringing in the process of recording stuff when it happened and exactly what happens is very, very important. Moving to the next one to summarize, what is general reconciliation? It's a little less work compared to trust reconciliation because you don't have to do trust listing. So all you do is you basically find your closing balance, and you find all your outstandings and this, and you compute that, and then you basically record all your outstandings and make sure this is exactly what is there as stuff that your accounting software is actually reporting as well. Now we talked about compliance. If you kind of do trust and general reconciliation, you need to produce these documents, and I'll show you in a few minutes in a demo how you produce these documents, and it makes it much more simpler and easy to manage. There's chat windows available where you can ask questions, and we'll be more than happy to answer the questions as I'm doing the demo. But feel free to engage the support staff who is logged in as well. They will be more than happy to answer a few questions as I kind of continue this demo. I want to take this Thanksgiving long weekend to thank everybody as well, because you guys voted for us, and we have now won in several categories, so like case management, cloud-based practice management, matter management, timing and billing, calendaring and docketing. So we won in several categories. We are extremely thankful to you guys for that. So let's now move into the demo. And what I have here is, what I'm going to do is I'm going to kind of walk you through a process of doing a client and then quickly jump into the reconciliation process. Now, as you know, you create a contact, right? You can just say new client Bob Meyer, and you can fill in the rest of the information, which is pretty irrelevant for this demo. I'm going to create a matter, and I'm just going to do two things. One is take money from him as a retainer and pay a very small disbursement straight out of trust. let's say this one is, Bob versus Debbie. Let's assume that it's a family matter, and you can hit the save button. And let's say Bob walks in with a retainer. And this is where, I wanted to stress, the fee capturing and the handling of the retainer is very important. You have proper fee structure, you have proper contingency. If you have all these things, you want to establish all these rules of engagement right before you create the matter. And that's where, the rate tells you that, the assistant rate. You can quickly generate a retainer letter, right, and tell him, hey, this is what I'm doing, it has, your description, your fees, you have all that stuff. All you need to do is just sign it, make sure that this follows all your guidelines. So you're following these procedures very clearly, right? You're doing all that stuff. Then let me quickly, let's accept a new retainer. So let's say Bob brought in $500, and let's say that was yesterday, and that's when I took his check and I deposited it into my trust account. You can even accept credit card payments, and you want to proceed, give him a receipt and do an apply. Now, that goes back to our compliance statement again here, making sure that he gets proper receipt upon acceptance of a retainer, right? You want to give him a duplicate, and sometimes you even want to give him a sales receipt because, what if he has to submit? Obviously, retainer receipts need not have sales, but let's say payment receipts, it's good to have a sales receipt because if he wants to submit it, it'll be useful. So that's 3 copies, 1 duplicate, and the sales receipt. So you can keep 1, you give him the other 2, or you can, can do that. So as you saw here, some of the key information that you want to capture here is the receipt number, the date, the service that you provided, the amount, the check number that he gave. You want to capture all that information here. Okay. Going back to compliance, we kind of have shown you most of the stuff that you want to do here. Now let's talk about, doing some payments straight out of trust. So if I go to trust, you can either deposit more, which is get more retainer settlements, or you can actually withdraw from trust. Let's say, I want to pay a disbursement straight off my trust account. Say it's a $50, I'm writing a check to court, and that's to Brampton, City of Brampton Courthouse. I hit the payment. So you're disbursing money, the check has gone out, you've recorded it, and you see here, you've recorded 500 receipt, $50 of, money taken away, and the balance in trust is $450. Kind of tells you right here. Okay, so we've done this. Let's now look at back to compliance. So when we are back to compliance, they talk about raising of invoices. So let's now put a few things and raise an invoice. Okay, so I'm going to put hey, in my initial client meeting with you, I'm going to charge you a flat rate of say $200. So it's always a good habit to do a preview of invoice. So let's do a quick. Even if I do this, it doesn't allow me to do invoice because we want you to do a preview. So let's go ahead and do a preview. That's a nice invoice. It tells you how much, subtracts all the remainder, and tells him that, hey, the balance in trust is $224. So let's actually raise that invoice. And this is where the compliance again kicks in. This is uLaw, you are attending a uLaw webinar. So, this is uLaw software. We are just demonstrating it to show you that you can use how you do the reconciliation process. Okay. So that's your invoice, and the balance is there. Now let's go back to the compliance procedure. The compliance procedure says, hey, check for invoice balances. Make sure how you want to get paid. So you can click on a question mark, and it tells you, hey, I have an invoice balance of $226. That's my invoice balance. Now we go back to how you get paid. You can get paid from trust or general, and I'm going to do both, just as this one. So you click on transfer. this is getting paid from trust. You can click here and say, hey, I want to transfer exactly $226. You can't transfer a cent more or cent less because that's exactly what you actually raised as an invoice. So, so you are transferring $226 from your trust account into your general account or whatever, you can choose whatever account that you want to transfer. And, whether it's a check or in this case, it's an electronic fund transfer. This is where you wait. You actually go to your bank and do this transfer for $226. The bank will give you a requisition number. You just put that here, hit the transfer button, and when you complete, you can download Form 9A. As you see here, everything is ready here. You can just download Form 9A and be done with it. So in this case, I'm going to go here, download Form 9A, and I think I did not complete my reconciliation. Give me 1 second. Okay. Put my I probably haven't completed some form, so I can download my Form 9A and be done with it. So what you really saw now is we completed this process, and now we're coming to our reconciliation process. I wanted to just go through these, so that way when I enter reconciliation, it's a little easier. So let me go through the reconciliation process. Let me do first trust account, then we can do general. Let's do trust. Now, the first and foremost thing, and this is where I'm going to go back to step 1. You need to record your bank balance as per statement. Okay, that's the first step. You need to make sure that you record your bank statement. So you need, in this case, let's say your trust account. Obviously, there's a demo account, so I'm just going to put money there. Okay. So once I've done that, what you do is you start looking at your month. Obviously, this month I only have so much, but as you see here, the $500 that we got from Bob is sitting here on the 4th. That's what I put. Now you go to your bank statement and you see, do you see the 500? If you see the 500, you check mark the 500 there. You click here and say which date did that check really clear. If it cleared on the 4th, you say, hey, it cleared on the 4th. Similarly, you go through this one. Hey, that cleared on the 3rd. This one, maybe it cleared on the 4th. So, you mark all your bank dates to match with your accounting dates. Now, if you put them really close, they're going to be exactly the same, right? Now, this is an electronic fund transfer. So this one has to match 100%. Like, if you put it in accounting software as fifth, it will match with fifth there as well. So you can say fifth, right? And similarly, like, the disbursements, like, you can mark when it was actually cleared in the bank. And once you mark all of them, you will see that the two match, only then the reconciliation button will come on. It will not come on if I didn't clear everything. This is the key step. The key step is that accounting software does not even allow you to reconcile till every ledger element here matches with your bank record. So you go through your bank record and you start marking, oh, I see this, I see this, I see this. And when you complete this procedure, it allows you to reconcile. Now, this is like, I know it's a demo account and, it has only 7 records. But in real life, you would have, say, about 40 to 50 records a month. And that's why we encourage you to do this on a weekly basis. On a weekly basis, you can do like a preview, right? You could do a preview of reconciliation saying, hey, I've already marked these. And what softwares like ours do is if you do weekly preview, when you do your monthly, it automatically marks them for you. It tells you, hey, these are the ones that I already saw. You can just blindly go ahead and mark them. You don't have to wait for you don't have to redo this bank rec again. Like you could do it that way. Okay. So let me just go ahead and do a reconciliation statement because I want to explain that reconciliation statement. And let's go back here because as you saw here, there are like 4 fundamental stuff that we need to capture in that reconciliation statement. And I want to show you that we capture all that. There you go. That's our reconciliation statement. I'm going to now bring it in context. That's step one. So as you saw here, the Law Society wanted you to do step one, which is your listing of your bank statement. And you saw that by you kind of, I'm going to keep the two next to each other so it's easy. As you saw here, this is what the step one is, and this is exactly what the step one is. Hey, that's what it is. You cleared all of your outstanding, so that's why those two are all zeros, and your mixed, this thing is there. The next step is it showed all your cleared transactions, right? In this one, I did not have any outstanding, so that's why it was really, it went very easy, but if I had any outstanding, I would have shown the steps, and then this is my client trust listing. So if you look here, I have listed $296,000, in my trust account. I need to break it up for every client and tell the last date of transaction. Obviously, you see that this is a demo account, so it has a lot of trust listing. But you see at the end, it adds up to that exact amount that is there in step 3. So that's the hardest part of reconciliation, which is doing the client trust listing. But if you have a legal accounting software, it's going to be a piece of cake because that's going to do that work for you. In this case, as you saw, Bob Nishmeyer, the one that we entered today, has $224 balance in trust. You need to bring that into your trust listing so that you can add it up. And then the last step, in reconciliation is doing the trust comparison. As you see here, we kind of compared the trust and this. So step 1, as I demonstrated, straight from the bank. Step 2 and 3, the software automatically will produce it if these listings are there. Right? In this case, it only shows the clear transactions. We go one step beyond what Law Society wants. The Law Society does not ask you about, clear transactions, but we put it there. The reason why we put that is because when you print this and you keep it, you exactly know what checks you cleared in that reconciliation process. You know which ones matched with your bank record. So the compliance document does not ask it, but we thought hey, that's a very valuable step. In fact, we've even given this recommendation back, asking some of the law societies to see, hey, shouldn't this be part of your reconciliation? And then obviously step 3 that you saw is your client trust listing. We have it here, listing the last date of activity, the client, and the balance. And then the final step is obviously the trust comparison, making sure that the two exactly match. We would not even allow this to happen if the reconciliation button, as you saw, did not even come on in the first place, and you cannot do that. Okay? Now let's go and demonstrate general reconciliation. That's a lot more easier, basically because all you need to do is just say reconciliation general, and you have to choose your bank account that you want to do. And let me be creative here. I'm going to not clear a few transactions. I only cleared these 2. So I think my bank balance should be 600, I believe. I'm just going to close enough. Adjusting my bank balance just to reconcile because I want to show some unclear transactions. So let me do that. That's going to be, if it's going to be 483, I believe, should be fairly close. The 84 and 23 cents. So that should be and let me get the last dollar in, and now my reconciliation button should come on. So do a reconciliation. Should be fairly straightforward. So if you look here, according to the Law Society guidelines, you need to do step 1, which is basically show all your bank elements, and that's what we are showing here. The next one is we are showing the clear transactions, which is not a Law Society requirement, but we are doing that. Step 2 is showing your outstanding withdrawals, and that's here, your withdrawals or payments, showing that up. And then the next one is showing your deposit. That's it. So you saw like general reconciliation is a lot more simpler than trust reconciliation, basically because you don't have to handle errors, you don't have to handle client trust listing, which is the hard part in trust. So what we have now demonstrated is we've shown you how to do trust reconciliation. We've shown you how to do general reconciliation. Let's go to compliance. Like, there's so much that you need to do here, right? Like, trust ledgers, general ledgers, and all that stuff. Now, because you've done reconciliation, your records are super accurate because you aligned your accounting system with your bank. So that means there's no issues with any of the records that you have. So that means a client trust ledger should be very simple. Like you can just say compliance, and it'll tell you what to do. So if I look at the bookkeeping guidelines, it asks you to do trust ledgers. Let's do trust ledgers. I'm just going to do it for this month, just the month of October. Let me just do it for the month of October. And let me just download it. It should have today's client, the one that we talked about, Bob Nishmeyer. You saw that the $500 that we got in trust, the $50 we paid to the court, and the $226 that we withdrew, that's the ledger. So you saw the very nature of you completing the reconciliation. You know this is 100% accurate. So that's where, like, when you produce this document, show it to an auditor, he's not even going to question it. So most people here who are attending the webinar who have gone through an accounting audit, either by using our software or any other software, they know that the first thing that the auditor actually looks for is your reconciliation statements. They will look for the last 6 months reconciliation statements because they know that if they can validate your last 6 months reconciliation statements, they know your ledgers are super accurate because this is purely just a documentation of that, right? So that's where reconciliation is very, very, very important, okay? Similarly, general is the same thing. Like, I'm going to just do general, for the month of October. Let me just do it for the month of October. You can do monthly. Like, I can just say monthly and hit the download button. And when you do that, again, you see this. All the clients are here, but I'm just going to focus on Bob Nishmeyer, the one whom we did today. There was an invoice for $200 plus $26 of HST. Here you go. $26 recovered from the bank. Like, you reconcile the whole thing. So, general ledger should be like super simple. There's no balance. So that's what makes it so easy, right? So similarly now, like, journals, I'm going to just skip that, like, or I can show one. I'll just show one sample, like, it's basically like, just showing the monthly view of all the transactions as far as receipts go. So in our receipts here, obviously the 500 from Bobby, the 700 from Mr. Hobb, and employment, giving you another, rights incorporation giving you another 1,000 needs to be recorded. There you go. So those are the 3 ones. So this is like, a journal is a full view of the date range, right? Like it gives you everything, received from, matter, file, purpose, amount. But a ledger is more like it's divided on a per matter level. You see, like, hey, for this matter, this is what happened. For this matter, this is what happened. But a journal is more like, hey, from this date range to this date range, this is what happened. That's what a journal is all about. So similarly, you will have like receipt journals, trust payment journals, and disbursement journals, right? Now, if I did any intermatter trust transfer, that records will be here too. Now, intermatter trust transfers also, they are basically, when you did that, like there's no bank record of that, right? So you will see that, like, when you do trust comparison, they will align properly. Let's now look at fee book. Okay, I'm going to do a quick fee book for this month. We do a monthly fee book. And the most important thing in fee book is understanding your taxes. So in this case, like, hey, the $226 invoice that you raised had $200 as your revenue and $26 for HST. And this is what the Law Society is actually looking for, making sure that you have recorded all your revenue properly. Fee book is basically your revenue statement in a format that the Law Society actually wants. Similarly, they also look for expense book. They don't review this in great detail, but they just want to make sure that you're managing it well. And all they're looking for is like, hey, are you capturing all the expenses that you've had? Like, hey, there was a corporate expense, there was an application fee that you paid, some had HST, some of them had HST. That's all they're looking for. Like, have you captured all that stuff? And finally, for Ontario, obviously, all the Form 9As, we allow you to even do a monthly Form 9A, because sometimes it's hard to do Form 9As on a regular basis. So, this is where, we have all the Form 9As that you have. That's the Bob Hobb one. Let's look at the Bob Nishmeyer one, the one that we did today. $226, everything is filled in here. As you see, the Financial Institute information, all you need to do is just sign. Okay. Finally, we went backwards. We did the trust and general reconciliation first, and then all these became just, document downloads. So if I go back here and look at that, if this is what the auditor is looking for, reconciliation is the most important step. You cannot achieve getting all these kind of documentation for an auditor without doing reconciliation. That's why when you meet an accountant or when you meet anybody, they ask you hey, when is the last date you reconciled? So they always do reconciliation first. Once they do reconciliation, they know that what's happened in the bank, which is the truth and the only truth, is matched with your accounting software. And once the two are matched, the rest is just documentation. At this point, we have about 9 minutes left. Again, thanks to our support staff who've been very patiently, collecting a few questions here. And, we're also thankful to everybody who voted for us. It's a great pleasure to be nominated and win all the 5 categories. We've again been nominated for 2019 as well, so, please vote for us. But this is a CPD, so don't forget to click on that link. Go and give your attendance ASAP because we need to submit that to all the law societies. So there are 2 links on your chat window. One is for CPD, and the other one is for the voting. So please go ahead and do that. Finally, I'll stay online for a few minutes to ask a few questions. And if there are any questions, I'll answer. There are a few questions that have been directed to me. Let me answer them. First one is, what is the format of fee book? Okay. Let me take you through a fee book. As I told you, the most important part of a fee book is to capture, your taxes. Your HST needs to be captured, and your fee needs to be captured. So that's what you need to capture, and you need to do that. Zeldin, sir, what's your name? Thank you. I'm one of the personalities who work with uLaw Stock. My name is Dams. Thank you very much. And the name of the CPD is Trust and General Reconciliation De-Mystified. Okay, that's the name of the CPD. So, don't forget to give your attendance. Let me go through some of the other questions here. Oh, taxes, tax report. Okay, let me go through that. So, we always talk about law society compliance. We never talk a lot about tax and tax implications and CRA audits. What if your law firm had a CRA audit? The CRA is not looking for your trust. They're looking for your general. The reason why they're looking at your general is because they want to make sure that you're capturing your taxes properly and you're actually managing your stuff properly. Now, because you've done your general reconciliation, you can go here and you can click on the HST, and I'm going to do a quarterly HST now. You see that all your, this is the last quarter. Let me capture this quarter so it's even. So I'm going to do first quarterly. Obviously, this is only like a few days into the quarter, but I just want to give you a sample of what we did. Look at that. The HST that we paid so far is $11.76. The HST that we collected is $26 for today, and there was another $1.76 for another legal fee that we did. So clearly now you owe already in the first 5 days of October $16.03 to CRA. this is where general reconciliation makes a huge difference. If you are not reconciled in general, you cannot produce this report because you don't know all the HST that you paid and you don't know all the HST that you received. Because only when you reconcile, you know that your accounting software has split basically the amount that's there in the bank. Because if you look at a bank statement, it'll just give you the total amount. It's going to give you 226. How do you know in that 226, 26 is not your amount? That's why reconciliation is very important, because when you reconcile, the amount is actually reconciled with the bank and the split is recorded so that we can produce this ledger. So look at it this way, like there are two bodies that are looking for reconciliation statements. The law society is looking for trust because that's what, makes them believe that the legal professional is actually following the norms of trust account properly and he's liable for what he's doing. The CRA is what is looking at your general reconciliation so that they know all your tax filings and all your books are balanced, and that's what they're looking at. We strongly recommend that you spend some time understanding reconciliation well, because as people are asking me again and again, why is it even important to do trust and general reconciliation? I cannot stress more, that for compliance reasons, you should be doing this on a monthly basis. I do want to leave you with a note that don't forget to download our app on the Play Store or App Store. It's called uLaw. We remind you of CPDs, of course, so that way, you can come and attend our CPDs. But most important, we remind you on the date when you're supposed to do the trust and general reconciliation. So go to your App Store, search for uLaw, download our app, use it basically because, it helps you with your docketing and all those features. But we also send you reminders via notification when it should be done. Let me go through. There are a few more questions. I did not catch the name of the CPD. There you go. It's there on the screen. You can go ahead. There's also another question that was asked about ledgers and journals. How do I manage them? Again, as I told you, you don't have to manage them. You fully don't have to manage them, basically because in the CPD entry, you need to put superfluid software. Okay, if that's what you're asking, please put superfluid software because that's what the organization is recognized as. So please put superfluid software in the CPD entry for LSUC, okay, or LSO. Okay. What I wanted to say was the question on ledgers is as I was explaining, the ledgers basically are at a matter level. The ledgers capture what happened at a matter level, while journals actually capture what happened in the date range. So I hope I answered that question. The key difference between that and this is what happened at what. There are no more questions, but if anybody else, any other questions, the chat line is open. Again, we want to thank you all, and have a wonderful Thanksgiving long weekend, and hope to see you soon. Don't forget to visit us at webinar, info.uLawPractice.com/webinar. That's where you can register for our future CPDs and our other webinars. We have interesting ones. Let me bring up that website. So today it was trust reconciliation. We are talking about multi-user firm, if you're a law firm with several lawyers, how do you handle that? We have another CPD coming up soon about expense management. We have a bookkeeping compliance CPD coming up soon. This is all for Ontario, New Brunswick, and British Columbia. CPDs that are coming. So we will be uploading our webinars in YouTube. Let me pull our YouTube and send you the link. So if you go to our playlist, we have one called uLaw Webinar, and that's the link where you want to basically watch for, right? That's where our webinars are. That's our link, so you can bookmark that. Subscribe to our YouTube channel. If you actually subscribe to our channel, update these things, we send you notifications. So download our app, subscribe to our channels, we will send you a lot more stuff. I will stay around for another minute or so, but if there are no other questions, thank you and have a wonderful long weekend.